Hello to all traders. I'm Amirhossein Namavar. I've been active in trading and financial markets for over 16 years. Today I'm here to teach you a highly profitable strategy in a very simple way so we can make money in the financial markets. And remember, this method is useful for classic price action traders. Watch my videos, you'll probably really like them. Let me start by showing you how classic price action traders view the market. They look at the market in 3 cycles: spike, channel, trading range. And if you look at it in a chart, it's really easy to spot. It starts with a very strong move, like a series of green candles breaking through a resistance. After that, we see a channel forming as pullbacks begin, and then when this channel breaks downward, it can give us a setup. We see a trading range, and if we've gone short, we know exactly where our stop loss and take profit levels are. Spike, channel, trading range. Keep in mind, these come one after another, and you can't switch their order. Of course, sometimes you might go from a spike straight into a trading range, but you can't say trading range, then channel. Remember, the trading range and the channel can't swap places with each other. But spike, channel, trading range is the best way to see their cycle. Let's take a quick look at these together on the chart. Keep in mind, when I'm teaching on the chart, I mention subtle points very quickly. So you really need to pay close attention to both the chart and the lesson. Plus, these videos are short. I'm not telling you to follow the channel and subscribe. I'm not saying you should like it, but I am saying if you pay attention, you can benefit. So make sure to follow and watch the upcoming content as well. Here's a resistance level that breaks here. Usually, if these resistance levels are broken by very strong candles, like here with green or gray candles, for example, because my chart colors are a bit more professional, I try to use neutral colors. I'll give you the color codes for these. If a resistance is broken with strong gray candles, we realize that a spike is formed. After the spike, you need to wait and see how the channel forms. Channels are really cool, and they're also very easy to identify. You just need to look for a series of corrections and some pullbacks. If you look at this image, the first candles of the opposite color start to show you the weakness in the trend. Now, I don't know what style you know, but you probably recognize these as CPs or as signs of trend weakness. Even schematic patterns like wedges can be the start of a channel for you, and when this channel begins, there's a very simple technique. You should try to connect the lows together. After connecting the lows together, often people draw what their eyes can see. In this classic style, people say we connect the first 2 lows and go long on the third. The main point, something to note, is the first 2 lows, this one and this one. The next extremely important point is that when you draw a trend line, the first break to the downside will probably fail, and it will likely overshoot to the downside. If I want to draw this trend line precisely, you'll see that it's usually the first one, and in all the examples I show, the chart works like this. Of course, this isn't the style I trade with, but if you're someone who's come looking for a 1-to-1 or 1-to-2 reward, and you're either new or have an average amount of experience in the market, you can use these strategies. At the end of this very video, I'll also share today's live positions from my own real account, in addition to my FDM account, so you can see how effective these strategies are and how they can be optimized. You can get higher rewards. Anyway, let's get to the main point. I was talking about how we draw these channels, and when you draw this channel, you draw your trend line like this. Then you add a parallel line to it. Here, it gives us fake breakouts or short positions. Now let me explain that usually, you see 3 tops here. The third top itself can have 2 or 3 peaks, which even from a trend perspective shows significant weakness. I'll explain these things. Let's move forward. And then it's exactly the third phase, or the third cycle that forms. The third cycle is nothing but a trading range. A trading range has a high point and a low point. Its high point is usually the highest point of the channel, and its low point is usually the lowest point of the channel. So, this trading range you see here can extend and even come down to these lower levels. Why are you teaching us these things, engineer? Because this way, we can set your take profits. Many people call me engineer instead of my name. I really like this. So, that's why you'll probably hear me use it a lot. Well, engineer, why are you telling us that these positions could have their take profits there? Because in supply and demand trading styles, which I'll share some cool strategies about with you later, you'll realize that these are certain zones where the price and the market maker were busy securing their own profits during the upward movement, so it can come back and give reactions to grab those 2R or 1R rewards. It's really cool. Let's move forward. I can continue turning these examples into sets. But before that, let me go over the point from the previous slide again, where I told you to draw the trend line correctly. You can see in this example, you take the first low and the second low and draw an imprecise trend line. But a more accurate trend line would be to take the first low here and the second low here. Now, just like you saw in the previous example, there's a clear break of this trend line to the downside. But of course, we don't go short here because it's the first time and we could even go long. I'm not getting into that. These are pretty well known in liquidity-based trading styles. So, the style I trade with is called middle of nowhere. That's its name. And in middle of nowhere, we exactly also trade certain concepts. But for now, let me explain the strategy to you in a really simple way. Try to draw a trend line. If the trend line breaks, pay attention. You could extend the trend line you drew here through the break, and now your main trend line becomes this one. Now, the question is, exactly where and what are we trading? That's exactly the answer I'll give you in just a few minutes. After the channel breaks, remember that the channel is always in the direction of the spike, and once it breaks, we enter a trading range. We can short the top of the trading range and go long at the bottom. Keep in mind, if you're trading gold or euro, you can easily figure out where the correct stop is by looking at the range of movement in this trading range. A very important point I want to tell you about trading ranges is that you can consider the movement range of the trading range on gold, euro, and Dow Jones. Now, if you ask me, what's the benefit? I can tell you when you see a top twice and we reach the upper areas of that top, we can take a short position, provided we see candlestick patterns. This style trades like this, you can set your stop exactly one trading range higher, and with a success rate about 70%, that stop won't get hit. If it does get hit, a trend starting. So keep in mind that you can set your stops using the movement range of the trading range itself. Of course, this isn't anything new at all, because everyone who knows classic technical analysis knows that when they draw a channel, if that channel breaks to the upside, they can probably expect the price to continue by about the width of the channel. So, it's always pretty standard in technical analysis that we can extend by the same amount, and probably another movement range will be added to our previous move. Anyway, moving on. I was explaining spike and channel trading ranges to you. When a resistance is broken, we have a spike. The trend line that we draw connecting the lows breaks here. We know that these breakouts are probably fake, and I can even tell you in other videos how you can figure out when these trend lines actually break and when they're just doing fake breakouts. But after that, we move upward. Alright, here you're seeing a pattern that's almost a wedge. Technically, this is pretty much a wedge pattern that can give you some short positions when we start coming down from this area. So how do we trade this area? When you extend this trend line, and this trend line breaks here. From here on, what I'll talk to you about in the next slides. You might ask me, exactly what kind and how many setups can the spike channel trading range counter? In this session, I'm going to teach you one of the simplest ones, but you should know that there are also much more complex and deeper setups you can have with these. Plus, I fully know the supply and demand and liquidity styles, because to create my own style, I had to learn everything so I could figure out where they're talking nonsense and where they're useful. And right now, what I'm teaching you isn't classic price action. That's because I've taken and teach the parts that I know work, and the rest, the stuff market makers made up for us. I don't teach and toss it out. But there are 5 setups, complex, interesting, and I'm starting with the simplest one, the break of a trend line to the downside. In this session, I'll talk about, and in the next sessions, I'll show you how you can trade the rest. Let's move forward and look at the example. Is spike channel trading range that simple? Yes, when you look at this image, you see some really complicated things. Some of you might say, engineer, can you tell us how to trade the start of the spike? Yes, I can tell you, but it's too soon right now. Some of you might ask, can we trade the first point of the channel or not? Do we wait for 2 points to form and connect them? The first point traded. Some of you might ask, can we short this highest point? Yes, you can. And well, it does require a bit more knowledge, But don't worry, I'll share all of it with you for free. But in this part, I just want to focus on this one section. This section coming down, reacting to this trend line. Most likely, price action traders have a long position here because they connected first and second points. And here they can take a long position with a 1-to-2 reward ratio. Makes sense. Then as it breaks, you can immediately short here with your stop loss behind this area. Where could the reward targets be? That's the main question. We need to go to the chart so I can teach you this. When they break the trend line, that's our entry point. Our stop is behind the last high, and our take profit can be either TP1 or TP2. Anyway, keep in mind that all these lows that helped us form the channel can now serve as our take profit targets in the future price action. Let's go to the chart and see how it works. Look at the image. First, close your eyes. Alright, focus. 1. Find support or resistance level broken by very strong candles. If we start from the left side of the image, I can show you a resistance on the 15-minute time frame that, incidentally, was broken very strongly by spiky green candles, or Maribozu, or ERC. I don't know which style you're familiar with, but whatever you know, that's what they're called. And it was broken by these candles. After that, we wait for a series of pullbacks, so we can start drawing our channel. What I want you to find are the pullbacks. After these green candles, you should see 2 or 3 corrective candles. Pay attention. You should see 2 or 3 corrective candles that then start moving with a bit of compression in the direction of the spike. That means if the spike is upward, no channel can be downward. If it is, that's not a channel, and we've entered a trading range. To draw your channel correctly, remember that one direction must align with the spike. Second, try to spot a few corrective candles, and from there, draw a channel. Also, don't be afraid of drawing the channel incorrectly, because you only need 2 points to be able to draw your channel. This style trades in this way. I can teach you things so that, even without seeing these, you can figure out where the channel starts. Those are for future videos, so follow us. But if you want to draw something, our first point can be here. Our second point can be here. When we see a channel and draw it, this channel can be 2 parallel lines, or it can create some wedge patterns for us. In any case, we pay attention that usually the first touch to the bottoms is very important for us. And if we connect the second touch and the first touch together, we can draw a very optimal and good channel. Let's move forward. Here, you can see the wedge. Again, the first breakout can be a fake breakout. We've seen this a few times already in this session. If you watch all the videos out there and on the internet, everyone knows how to teach you channels. The only thing they don't know is how the bottoms break and which ones are fake. And that's something I know how to teach you because I have experience doing these things. I've traded these styles so much. I've hit stop losses, and I've even lost my money. I've also made a lot of money, which helped me understand how we can actually make money with this. Let's go, let's go! So what should we do when this happens? The next step, make sure to write this down. The next step is to extend this trend line and now draw your main trend line. Let me make the diagram clearer for you. Now, as soon as this trend line breaks, take a short position. Where should your stop be? Behind the recent highs. Tell me, I've mentioned it before. About 5 minutes ago, where did I say the take profits could be? How far down could this break go? All the lows that helped us build this channel. Now, these can be the take profits for our short trades, and in this image, you can clearly see that if you had set your reward at reward 1, the trade would have ended in profit. And if you had set your reward at reward 2, it probably would have gone close to your stop once, or maybe even hit your stop, in which case you could still catch the channel trading range spike again. Here, I draw a resistance. I'm scalping on the lower time frames. I see a spiky candle that is broken out. Usually, in this kind of situation, in the channel and on very low time frames, I might not see my channel, but I'm seeing a trading range here. And as soon as this trading range breaks to the downside, I can go short. But in any case, you could have taken a short position here and set your take profit at the previous position's level, which probably would have worked for this position. All in all, with this setup, we would have ended the day in profit. Here's a cool tip, an important point. When you make a profit, get up and walk away from the chart and that MetaTrader. Why do you stick around until you lose your profit? You keep going and going until your brain gets tired. The human brain can't really keep you alive in trading for too long. As soon as it's done its job and used up its energy, You need to get up and leave so you can recharge it. Don't forget to give it some protein. Don't forget to get some exercise in. Don't forget to sleep well so you can manage your enzymes properly. Let's move on. And another example, and yet another example. This was the trend line I updated for you. The position you take here, the stop you set here, and the take profits shown in the image. Let's look at another example. Are you tired? I'm sure you're not. Because now I want to go to today's live chart and share with you my own positions, where I think I managed to make about $17,000 profit in my own real account. I'm a trader who works entirely based on facts. It's true that my trading style is very complicated, and because I have different companies in London and the UAE, I can't share my style due to the investments and the trust investors have placed in me. But there is something I can do. I can publish my FDM. I can publish my real account. It's interesting. Let me tell you something right now that'll blow your mind. Something incredibly exciting. I passed my FDM with an average trading risk of just 0.07%. You heard that right. 0.07%. And to pass an account, you need 15% profit. Now, divide that by 0.07 and see how much reward that is. Now see how you should really dive into the chart. And I'm starting from the basics, teaching you incredibly exciting and very simple things. Wherever you are in the world, when you watch my content, you'll realize that we get it. I really love you all. I hope I get to see you again. But before I end the video, let's check out today's position statements. And don't forget to both like and subscribe. But let's go over the history of the account that's currently around $685,000 in profit. And you can easily, for example, get a report for 3 months of it. And if I want, I can share it with you. Of course, I can't share detailed trades with you because it's a method we use in our H-band while trading investors' money. But what I can do is at least show you the data and the graph, so you can see how you can gradually grow an account. If you take a look at the account, you'll notice the average reward to risk ratio is around 9 or 10, and that's just the average. Often rewards are 20 or 30. It's true that with the style of price action I've been teaching you, you can't get such high rewards. But the important thing is that since I'm the one teaching you, I can help you reach that level. Let's go to the chart, and I'll share some of today's positions with you. What you see here is exactly what happened. There's a spike downwards, and when this spike happens with very strong candles, you can start drawing the channel. You can draw the channel very easily, very simply, just like this. Right here are the reversal points where you can align this channel. You can place your positions in these areas after getting confirmation. Set your stop loss behind here. Yes, with a stop like this, up to the top I mark here, the reward to risk ratio would be about 1 to 22, and the stop loss was around 10 pips. I also took a position with a 1.5 pip stop loss, and I'm sure one day, if I have the time and I'm still around, I'll teach you how to do it. I hope these things have given you the encouragement you need to endure and get through this very tough but rewarding journey. Have a good day.